Have you ever thought about retiring comfortably but felt overwhelmed by the idea of needing millions in the bank? What if I told you that with just $500 a month, you could set yourself up for financial freedom? It sounds crazy, right? But today, I'm going to show you exactly how it's possible. Most people believe retirement is something you only achieve after decades of grinding, hoping that one day, Social Security or a pension will take care of you. But let me ask you this, what if you didn't have to rely on that system? What if you could build your own financial safety net, one that pays you for life, even if you're starting from scratch? The truth is, the biggest mistake people make when it comes to retirement is thinking they need to save a massive lump sum. They look at numbers like $1 million and think, there's no way I'll ever get there. But what they don't realize is that wealth isn't built overnight. It's built through small, consistent actions. And that's where the magic of investing comes in. Let's break it down. If you start investing $500 a month and consistently put that money into high-quality, long-term investments, your money starts working for you. Let's assume an average return of 10% per year, which is historically what the S&P 500 has delivered over the long run. That means after 10 years, your $500 a month has grown to nearly $100,000. After 20 years, you're looking at around $380,000. And after 30 years, you're sitting on over $1 million. Now, I know what you might be thinking. 30 years is a long time. But here's the thing. Time is your greatest ally. The earlier you start, the less you have to invest to reach your goal, even if you're starting later in life. The key is consistency and making smart choices with your money. So where do you invest that $500 a month? Let's talk about the smartest strategy. First, ETFs. Exchange-traded funds like VOO or VTI track the entire stock market and offer diversification with low fees. Instead of trying to pick the next big stock, you're investing in the market as a whole, which has historically gone up over time. Second, dividend stocks. Companies that pay dividends provide you with passive income while your portfolio continues to grow. Imagine getting paid just for holding on to shares of a strong company. Companies like Johnson & Johnson, Coca-Cola, or Procter & Gamble have been doing this for decades. Third, REITs or real estate investment trusts. These allow you to invest in real estate without ever buying property yourself. Some REITs offer dividends north of 5%, meaning your money is working for you from day one. Now let's talk about turning that investment into real retirement income. One of the best strategies is the 4% rule. This rule states that if you withdraw 4% of your investment portfolio each year, your money should last for decades, even adjusting for inflation. So if you build a $1 million portfolio, that's $40,000 per year in income without ever touching your principal. And if you live in a low-cost area or have other sources of income, that can be more than enough to live comfortably. But here's where most people fail. They don't start. They get caught up in excuses. I don't have enough money. The market is too risky. I'll start later. The reality is, waiting is the most expensive mistake you can make. Every month you delay is a month you lose in potential growth. Think about it. Investing $500 a month for 30 years can make you a millionaire. But if you wait 10 years to start, you'll have less than half that amount. So how do you get started? It's simpler than you think. First, open a brokerage account. There are great platforms like Fidelity, Vanguard, and Charles Schwab that make it easy to invest. Next, automate your investments. Set up that $500 to be automatically invested each month so you don't even have to think about it. Finally, reinvest your dividends. The power of compounding works best when your money keeps working for you. Here's what I want you to take away from this. Building wealth isn't about having a huge salary or winning the lottery. It's about making smart, consistent choices with your money. It's about leveraging time and the power of compound interest. And most importantly, it's about taking action. Imagine yourself 10, 20, 30 years from now. Will you be someone who wishes they started earlier? Or will you be someone who looks back and says, I'm so glad I made that choice? The decision is in your hands. If you found this valuable, make sure to subscribe for more insights on building financial freedom. And let me know in the comments, what's your biggest challenge when it comes to investing? Let's build wealth together.